Oh, it is 9:01? Oh.
Yep.
My watch is slow. I will call the meeting to order and I will adjust my watch. Great, 9:01. All right, so first order of business is to approve minutes.
I'd like to make a small change to the minutes, please.
What would that be?
On the section about halfway down, discussion with Webster Bank representatives about benchmark changes, the first bullet, some movement in international stocks. Funds were added to international stocks, or the international stock allocation increased slightly during the quarter, something like that, please.
So, I'm sorry again, Webster reported on the...
In the middle, discussion with Webster Bank representatives, the
First
first
bullet.
circle.
Oh, Yep.
Instead of some movement, that could be interpreted as international stocks did well in the quarter, which they did. But I think what we really were discussing was they added
To
to
the
the
position.
allocation in international stocks during the quarter.
So what language suggestion do you have?
Funds were added to the international stock allocation during the quarter.
Thank you for correcting me.
Mm-hmm. Thank you for taking note.
It's just a slight tweak.
It's just, it could mean many
Yeah,
things. I
movement
just wanted
could be
to clarify,
rebalanced, it
right?
could be
I mean, there's a
anything.
lot of things that movement could mean,
Right.
so
So
I
that-
understood what you said.
Say it again.
Oh, boy.
Funds were added.
Yeah.
To the international stock allocation during the quarter. During the second quarter, if you want to be really specific.
Second quarter. Okay, got it.
All right, everybody okay with that change?
Yep.
Yep.
All right then, let the change be made. Anything else?
Do we have to move it?
Yeah, move the amendment. Somebody want to move the amendment of the minutes?
So moved.
Second?
Second.
Discussion? All in favor? Aye.
Aye.
Ayes have it. All right, so, as amended, somebody want to move the minutes?
I'll move the minutes.
Second?
Second.
Any discussion? All in favor?
Aye.
Ayes have it. Okay. Discussion, new business. Are the advisors with us?
Not yet. Let me give him a call. I wanna get to know what we're doing.
He can only do so many things at once. He's maxed right out
All
this
right, I'll
morning.
slow down. Okay.
Terry, his head's whirling, can't you see? Okay.
Welcome to the audio conferencing center. Please enter a conference ID followed by pound. If you're a meeting organizer, press star now.
Kind of shocked at this.
I know, I was shocked too. I looked at it.
You are now joining the meeting.
Double digits for that. Thought that was good.
Morning. I didn't usually hear a couple beeps. Oh, good morning.
Good morning.
Hey.
Hi, Lucas, it's Elaine.
Good morning, Lucas.
Who's on for Webster?
Just
Lucas? Just
Lucas
Lucas?
and Lucas alone.
No,
Bob is able to
Oh,
join.
Bob, good
Oh.
job.
Was
All right.
uncertain. How is everyone?
Good, how you doing?
Yeah,
Good.
sorry.
Good.
Okay. I was just uncertain at the time when I made it. We didn't have any issues. Now my wife's waiting for a procedure. She hurt her back, so
Oh, no.
it's one of those. When is it going to get corrected? So she needs a surgical procedure.
Well, we've
So it
got,
looks like it's going to be tomorrow now.
Oh, well,
we're glad you're here, because we actually have a question that we thought you could hopefully answer for us. So we have Brian, Terry, Bill, Leslie, and Elaine.
Yes, and
We have a
before
few
we hit the
members
question,
missing.
let me just say thank you. Hopefully, things will go well with your wife. Bob.
Yeah. That's right.
Bob?
Hello?
Okay. Joy, do you want to ask the question? Do you want us to jump into the
You didn't hear it.
performance?
Go ahead,
and-
say it
All right,
again.
we
Field
just
the
wanted to
question
say,
at the
about, we're wishing, good health for your wife. Hope things, go well. She has the procedure.
Well, thanks, Terry.
And it's successful, so,
I hope so, yeah.
all right. Well, now, to business.
Bob, I think that you don't need to answer the question now, and we're wondering, about the distribution of that 1.148 million for the building, and how it
Right.
plays into the main fund, like, is that a separate account? That's what we know we ask this a lot, because you don't see that money come out of
Yeah, no worries.
the main account value.
Right.
Right. Yeah, no, it is a separate account.
Yep.
So the way it's set up is, the main account is our primary investment account, and it generates, return that through the spend policy is allocated to different
Yes, I know, that's what I'm
sub-accounts.
asking, I just wanna be sure.
And from there, if you don't use the funds, they remain there. They're called income accumulation. So the spend is labeled, income. It accumulates. We do draw off it, as you know. Right now, I
Right.
think it's about 135,000 from the guild account based on the spend policy. So any unused spend dollars accumulate for future use.
Okay,
So that guild income accumulation account built up to $1 million,
right,
and it was a perfect opportunity to use those funds to cover, the most recent expense.
right, okay, that's what we needed to clarification on.
So if we were to write a check today for $1 million out of that account, we'd still have 26 million.
No, we only
No.
have 34,000 in that account,
No,
because it's
in that
not,
account. It's
not
in that
far,
account.
yeah.
Yes.
34,000.
So what,
Page 12.
yeah, there's $34,000 left, because we, as discussed at the last meeting, we distributed out 1.148, about that.
Okay,
to-
And
for
now
the new
Teresa
renovations.
Murphy is on her way to.
What'd you say?
Teresa Murphy's on her way to the Bahamas.
So, but what Bob is saying and what he clarified for me, was that the other accounts you see starting on page 12 of the quarterly report, is the incomes that accumulates in each of the funds that we still have open, I believe, right? That's not paid out.
And it's not reflective of the cover page with the 26 million,
Correct.
oh, I see.
which
Okay.
Correct.
I thought it accounted in there, so
Yeah, I
that's
thought-
good.
Right, okay.
I thought that was a quarter.
Me too,
Yeah.
me too. So we have more than we think.
Yeah, yeah.
Yes, that's exactly right. Okay, now
Okay.
I think we're all clear, and we can move on to the actual presentation. Thank you for addressing that.
All right, perfect. All right, Lucas, you're on.
All right, well, good morning, everyone.
Morning.
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 Happy fall.
Happy fall.
Yeah. So I'll start with just kind of a market economic outlook or State of the Union, if you will, and then walk through the presentation, point out some changes that have been made to the portfolio. Most of this is done over time, as you know. We gradually adjust the portfolio, as the markets evolve. But this year's been obviously a very interesting year. Not a great year to be an economist or a market strategist, a prognosticator, because many of the leading economists said we'd have runaway inflation due to tariffs. While inflation is probably still a bit higher than the Fed wants, we haven't seen a massive surge. We still tend to be between 2% and 3%. I think, as I've mentioned in the past, throughout my career, we always modeled inflation at 3%. The Fed's looking for 2%, and if they don't get there, I don't believe it to be the end of the world. But clearly it's something to keep watching. The economists still claim that we have not yet seen the full effect of tariffs. But we as a group spent some time, actually analyzing the numbers that go into CPI and making some assumptions on how the tariffs would affect things. And some of you may know that housing accounts for 40% of CPI, and largely many of those costs come through rent and mortgage payments. Much of which has been pretty stable, and housing costs with rates falling now are tending to come down. From the market's perspective, I've mentioned these strategists. People on Wall Street like to predict at the beginning of the year where the S&P 500 is going to end up at the end of the year, and I think for the third year in a row we're at a point where everyone underestimated how strong the markets would be. So it somewhat demonstrates how difficult it is to time the markets and predict the markets. And I think that we spend most of our time trying to be prudent asset allocators and risk managers, and kind of focusing on the long term for growth of the portfolio, but in the short run, trying to manage risk. We were surprised that the 10-year Treasury has fallen below 10%. That seems quite low in a time when the economy is expanding and the stock market's up. So Bob and I were talking about this yesterday. So if you ask the bond market, we're in a recession. If you ask the equity markets, we're in this sixth inning of a bull market. So there's a little bit of a disconnect between the stock and bond markets, and that's okay. Disagreement sometimes is good when it comes to investing. If we all think things are good, sometimes that's when it's dangerous. So that's somewhat of a summary of where the markets are. I'll stop there. Any questions about the economy or the markets or anything you'd like to discuss before I get into performance?
So I just have one question, and in terms of exposure of what's driving the market is really an AI boom, and a lot of other companies seem to be reporting better than expected earnings, like Coke did yesterday, and the banks and things so far. So they seem to be doing okay, but warning people that the future may not be as good. In terms of where we are, the majority of our equity portfolio is in the S&P 500 and the total stock market ETF. So I'm going to assume that we're pretty aligned with the 8 stocks or so that are making the market go higher, or helping the market go higher. In terms of percentages and weights. Yes.
So both the total stock market and so it's VTI and SPY, have between, I think, 25 and 30% allocation to those top 8 companies, and so we're very reliant on that.
Do they get classified in technology or communication services? I'm just curious. I don't. You may not know the answer to that.
It depends which companies.
Yeah, different.
Okay.
So Meta and Google are in communication services, so it's a little tricky.
Okay.
So if you look at our tech allocation, about half of that Mag 7 is going to be in communication services.
Right.
So those, to me, those 2 sectors are actually, technology and the AI. And so that, given there's a lot of concentration, that's the way we're allocated.
Yeah.
And go ahead.
No, I was just going to say for the group here is that, so what's happened in the market, and Lucas stop me if you don't agree, but there's been a handful of stocks, Meta, Google, Apple, Nvidia, I'm missing a couple, who are driving the market higher, and it's increased the allocation of technology and now communication services to like the highest level probably ever, I think. I could be wrong on the ever, but it's pretty high. So the reason I bring it up is that you've got a handful of stocks driving the market, and last time we met, probably a year ago, I was thinking the same thing, that can this continue, and it's continued. So at some point it may not continue, and because our allocation is very high, because the market's allocation is very high, it could hurt us also just on the way down, just like it's benefiting us on the way up.
Yes. So that's an excellent point. That these companies are generating the most profits. It is different than the technology bubble because
they have profits.
Companies are highly profitable. Yes, so that's a key component. And no one knows where we are with AI, and I've been having these discussions that I think 10 years from now we're all going to look around and the world's not going to be as we picture it today. Who are the winners going to be? Who are the beneficiaries going to be? And at some point it's going to be second order companies. Right now it's the hardware, it's the data centers, it's the infrastructure of AI. But who are the true beneficiaries going to be? And you'd like to believe that a Procter & Gamble or pharmaceutical companies, drug research, that these innovations will drive profits in other companies, and we'd see more dispersion in returns. And this year, there have been glimmers of that. Smaller companies have done very well since the tariff tantrum in April. And again, to try to mitigate some of this risk, we have added to small cap. We had a very low allocation to international and emerging. We're now roughly at the target weight because there has been greater breadth. The foreign markets still are outperforming the U.S. market year to date. Some of that is currency driven. And who knows whether or not the dollar will continue to decline. Before I worked for Webster, I worked for a currency company, and it's very hard to predict which way currencies are going to go. But yes, excellent point. To a certain extent, we're along for the ride. But as Elaine pointed out, you've benefited greatly over the last 5-7 years because we stuck with this allocation. And again, we don't know how much further it has to go. The spending continues. We probably would have had a recession had it not been for the AI spend. And in my estimation, what we've had is kind of a rolling recession that affected certain segments over the last several years. Travel and leisure, obviously during COVID, and we've seen the services recovery, but other companies falling behind. So are we in a recession? It depends who you ask. Tougher for small businesses today. And if you look at the administration, it's very business friendly, but it appears to be benefiting only the largest companies, or mostly the largest companies that I guess can afford to lobby and have good lawyers to do tax work and move things around. So
I was just going to say, come on, let's get real. It's whoever his friends are. So okay.
The king's friends. Friends of the king.
All right, moving on.
Yeah, be careful who's listening now.
Yeah.
But What's the canary in the coal mine? I mean, what's the exit
So
strategy?
here, there is no exit strategy.
No.
You can't time the market, and you will ride through the ups. Like, we have benefited greatly from our equity allocation, but we are not overly exposed to the equity market. As Lucas said earlier, it's a fine balance that you make so that you have growth, but you also meet your income needs.
And we might give a little back
Yeah, but don't forget, the market's been up forever, and if you give 20% back of forever, it's not that much. So you have to, it just hurts at the moment, and only if you sell it. So we're not planning on doing that. So,
No, we're not, but, you know, we meet quarterly, so, Lucas, what's your thought on that? And what is the canary in the coal mine? When do you decide to do something?
I mean, I think, as I said, you know, we do things gradually. So, you know, I was going to get into this for the portfolio, but our view is that it's prudent to be neutral on your equity allocation. And so, looking at the report on page 2, you show at the end of quarter 64.4% in equities. I've brought that back down to 61%. Taken some profits. Elaine, you like this? I sold DTI so that we can have a better breakdown between large cap and small cap in the U.S.
thank you.
But my goal, you know, we're neutral. So my goal is to keep you closer to the 60%. It ran up from 60 to 64 because of the appreciation, so that's a good thing. So when there are opportunities for me to take profits and reallocate to fixed income, that's what I've been doing. The other thing that we have been doing, in your fixed income portfolio, you know, not all bonds are created equal. They're very safe government bonds, investment grade bonds, but we also had some bank loans and high yield bonds. They've done very, very well because the economy has been so strong. What happens to those bonds, though, if there is a market sell-off, they tend to sell off, sometimes significantly, during a market downturn. So in an effort to, again, reduce risk in the portfolio and protect us on the downside, we're now underweight high yield and bank loans. And, you know, whether or not this is the canary in the coal mine, there have been some, you know, headline making credit defaults, some of which were fraud. But in the below investment grade lending space, there's a lot of activity, and you know, I expect to see more defaults and some more stress. And whether or not that's systemic and causes the markets to sell off, I don't believe so. But I think, you know, right now I'm kind of, I'm keeping separating the peas and the carrots, meaning that stock is where we're taking risk, and in the bond portfolio, that's where we're being defensive.
Lucas,
And
I think that's...
as we've talked about in the past, go ahead.
Well, I was just going to say,
Much.
I think that's sorry to interrupt you. I thought you were finished because you paused. I think that's an absolutely right way to do this. I too am concerned about the private equity. I remember 10 years ago now, that was a big thing in all the distressed debt was a big thing in all the private equity funds. So I'm wondering if it goes a lot deeper than we've heard about thus far.
Yes.
So, and
Yes.
let's explain, maybe you want to explain quickly what distressed debt is and what the problem is, could potentially be?
Yes. So quick history, post-financial crisis, new regulations made it more difficult for banks to make loans to lower quality, newer companies. And so a whole industry was established because there was a lot of capital that was looking for attractive returns. And so for the past decade and a half, we've seen tremendous growth in non-banks lending to small mid-cap companies, and they have less regulatory oversight, and therefore the companies that are borrowing like it because they don't have to go through all the hoops that they'd have to go through to borrow from a bank. But there's this concern that the credit lending standards have been relaxed, in an effort to deploy capital. And it could be, like a credit event where if we saw a shock to the economy, either a jump in interest rates or
Recession.
a sell-off in the stock market, there could be significant losses and bankruptcies of these companies, which could wipe out some of that debt. We do not own any of that debt in your portfolio. They are trying to, they're calling it democratize investing. They're trying to, many are trying to push this type of debt into individuals and smaller institutions' portfolios. We've been very resistant. And again, we'll see how it plays out. But I feel like I've seen this movie before. So again, caution is warranted.
Securitized mortgages.
Democratize.
Well, thank you for that, Lucas. I'll just add one point. So, if we do get into a recession, then that will hurt these companies. And some of the companies that get lended to are, as Lucas said, they're down the market chain. But I remember when some of the holdings were a beef cattle farm in Nebraska, couldn't get funds to build their barn, so that these lenders come in and give them the funds at 12%. So it's, it's usury, but investors are getting rich on it. So, oops.
Are you guys still there?
Yes.
Oh, okay.
Cut off for a sec.
Okay. I didn't know what that was.
Yeah, it's cut out.
Whoever's listening.
And moving on. Thank you for that.
Moving on, yes. That was a quick lesson in
Well, thank you for that. Thank you.
I honestly, it's something to keep your eye on.
Yeah.
I have to log back into my computer. Okay, so let's have a brief talk about performance. I'll call out the page numbers. Page 2 is the year-to-date summary through the end of the quarter, up 10.7%. The total balance is $26,420,366. I looked as of yesterday, that's up roughly $200,000. So kind of sideways, but some appreciation in October. We have seen some volatility, but now the portfolio is up over 11%. Page 3, our newest page, and it's my favorite page now. This is where we
Thank you.
we have a target allocation. Yep, it was team effort. The target allocation is your benchmark. Actual allocation is where we were as of September 30th. And looking through the portfolio, as you go down the column, overweight equities, as I mentioned, not as significantly anymore, by about 1%. This year we added to small cap to bring ourselves close to the target allocation. On the international side, we added a little bit to develop, and we initiated an allocation to the emerging markets. They both appreciated well. Not a big position, but the companies in these markets tend to be less technology focused. So it's a way to, again, diversify away from the big tech and communication services companies here in the U.S. fixed income side.
Hang on a second, Lucas, sorry to interrupt.
the-
Lucas,
Sure.
sorry, I wanna go back to the domestic allocation. I thought you said we're only 1% over. It looks like we're 4%
They
over.
moved it down.
They moved it, so you moved it down after September 30th? Is that why we didn't see the transaction?
Correct.
Okay,
Correct.
thank you.
Yeah, so it was an October trade.
Okay,
So we'll talk about it, I guess, next quarter.
next quarter, okay, that's fine, go ahead, thank you.
Yeah.
So where'd it go?
It went to 61%.
No, the
Fixed income, fixed
so
income.
the 3 went to fixed.
Yeah, so now our fixed income is around 32% versus what I'm displaying here as of September 30th, 29. And, again, if the markets continue to appreciate, that's going to be what I would do again. Markets fall, I might go the other way. But moving through the fixed income, you see emerging market debt at 0. It's not part of our benchmark. We've been discussing emerging market debt. It's done very well. We might have missed an opportunity there, but again, it's not part of our benchmark, so it's an opportunistic asset class. But if you look at high yield and bank loans, here's where we have a significant, fairly significantly lower allocation to versus our benchmark. And as I mentioned, this particular high yield bank loans tend to draw down when the equity markets draw down. So we're again we're more defensive on our fixed income side. Alternatives, we've got a larger allocation there. These have been attractive because they've been consistently earning 4 to 5%. That's above T-bills, and historically has been. So again, used as a diversifier for the portfolio because it's neither stock nor bonds. So we don't have that interest rate sensitivity of bonds, and we don't have that equity exposure of the equity markets. Page 4. This gives you a sense for our current allocation, top, middle, current portfolio. Given our big allocation to U.S. equities and the large weighting, you see technology and communication services. Okay, so we're actually at that 38%. Again, that's not a deviation from market cap. That's the result of owning market cap index funds. And again, these have served us very well over the last 5, 7, 10 years. And I just want to remind people that Alan Greenspan wrote his paper "Irrational Exuberance," calling it tops of the market in 1996. So we didn't reach the top until 1999, so he was 3 years early. So I think he's a wise man, but it's very difficult to pick the peak. And again, you're going to read some people saying this is read some smart people telling you this is the peak, but no one really knows. So I'm on to page 5. I don't need to go through this line by line, but on page 5, you can see that we did well with our emerging market allocation. We invested roughly $400,000, $399, and it's appreciated at $472. So we got almost 20% return by allocating away from U.S. equities into the emerging markets. But unless there are questions on any individual investments, I was going to jump to page 7, which kind of highlights the total portfolio, and arguably this is what should truly matter, is the total return. So looking across the top line on page 7, past 3 months, the portfolio has returned 5.46 versus 5.76 for the new benchmark. 10 point, and then year to date, this is going to be the blended benchmark. I believe we shifted after the first quarter. 10.71 versus 11.8. So, and then looking out to 1 year, we still have outperformance relative to the benchmark. The majority of the underperformance, which again is not significant, is due to underperformance of our fixed income investments. We added to duration this year, buying longer term bonds when the 10-year yield was around 4.6 or 4.7%. Our plan was to add cautiously over time, but since then rates have come down to 4%. So our allocation is appreciated nicely. But our view is that if the economy's strong and stock market's doing well, rates should be 4.25 to 4.75 in the 10-year. The fact that they're at 4, has led to great appreciation, and we didn't participate in all of that. So thus, this year, we've underperformed. But if you look across the fixed income line, for the 5-year, 7-year, and even inception to date, we still have done better, largely due to us becoming shorter duration when the Fed started raising rates, and we performed very well in our fixed income portfolio, and that drove outperformance over the 5 and 7-year period for the total portfolio. So I guess my point is we're not always going to get it right, and when it comes to our fixed income portfolio, our view still is that we have a logical allocation. We have, we have some longer term bonds in the portfolio, but also a lot of short-term bonds that are yielding roughly the same as 10-year bonds without the interest rate sensitivity. So our bond allocation is more conservative than our benchmark, and that's the way we want it today, that we want to be very conservative with our fixed income.
Lucas, can I go back and ask about, I'm kind of shocked that the Dimensional Small Cap Fund has underperformed so badly this year. Have you guys taken a look into that at all?
Yes. So just dimensional. So we selected the Dimensional Fund because across the small cap segment of the market, there are a lot of companies that have no profits, and what Dimensional does is screen for quality of earnings. They have they tend to be value oriented, and what's happened this year in the small cap market is that the unprofitable companies have significantly outperformed profitable companies. So we believe that investors are looking through the small cap universe trying to pick the next AI winner and are willing to pay top dollar for companies that have no profits. We think that's a temporary situation that might not end well for some of those investors. So the fund is underperforming, but it's doing what it's supposed to be doing. It's focusing on the profitable companies in the small income segment. So we're keeping an eye on performance, but relative to the small cap value index, they are outperforming. It's just small cap value is not outperforming small cap growth. But that's a great question.
Thank you. So
Where are you seeing that?
Yeah,
That's-
if you
Page
look on
5,
page
page
7,
5.
If you look on page 7, in the middle, it
Yeah.
says USA Small Cap Fund. And then under it, the Russell 2000 Index.
Yeah.
So if you go to the right,
Oh,
under
I
the
see.
year-to-date column,
Yeah.
it's the fund that we own is a Dimensional, it's the name of the fund company is Dimensional, and it's a small cap fund. And if you go to the year-to-date column, it's only up 5.79 versus the index of 10.39. Can you make sure he can see what
Can you see that?
Can you see that?
Small cap,
US
and then the Russell
In the
2000 right
literally
under
in
it.
the middle of page
Right
7.
there, yep.
Yeah.
So I asked Lucas
Do you see
if
it?
they had looked into the underperformance. Can you see it?
No,
So
Okay.
here's
Hang
the,
on, Lucas.
here's the small cap.
yeah,
Sure.
And so when you come over to look at it, I just stand up, I can't see.
yeah, I can see it back there, but.
Yeah, here's your small cap right here, small cap fund. It's performing 5.79, but the
Yeah. Versus
benchmark
is
is
10.
10.39.
Right.
So it's half what the market's doing.
Right. So
Because the
we're-
fund is underperforming.
it's not losing, but it's losing.
Correct,
Right.
underperforming relative to this benchmark, but Lucas's answer was valid as to why it's underperforming.
And the actual fund is listed on page 5 under small cap USA. So you can see what the symbol is and what's in it. Are you on page 5?
Yeah,
Yeah.
You guys ever
the
think
small
about
cap.
indexing that?
yeah.
That's the symbol.
That's what I was looking at. I
Yeah.
see that it's up,
Allocation?
but not as much.
So,
Yeah.
yes, we have. So I think in the past, we did use a Vanguard index fund, or no, I'm sorry, we used an active fund manager. So
Yeah,
the
who wasn't
DSA
good.
fund it's somewhere between an index and an active fund. So it's very inexpensive, it's systematic. Lynn, you probably remember.
You know,
we probably came
we've
across
used them,
an
yeah,
internal
we've
fund.
used them,
Yeah.
I've used them before,
Yeah.
so I'm not,
So-
split it or something, so you're not, you have some exposure to what's going on right now, it's just, no, we don't have to discuss it, it's just something that you might consider in the future.
Yeah. Yeah. So what we look at, we tend to look at if you're on page 7 again,
Yep,
we look at the 1 and 3 year numbers. And, it's tough to evaluate a manager 9 months year to date, and again, because it's active or it's not holding all of the companies, it's not an index fund. We expect some dispersion, but over a 1 year and a 3 year basis,
They're fine.
they have outperformed the total Russell 2000.
right, that's, completely agree, but, so,
Yeah.
I would put that on my watch list, because that's pretty big for a fund that usually performs like it has over 1, 3, and 5 years. So, we'll see if it,
Correct. Yeah, no, yeah, something to watch.
right,
We're keeping an eye on that. So if that falls into a full year of underperformance, then it's likely we would look at that. And we haven't had much luck with small cap managers. The arguments, there's a lot of opportunity for those that do good research, but oftentimes indexing or quasi-indexing, as we're doing, tends to be the best way in many markets.
it's easier for you.
But no, great point.
Moving on.
So, I mean, that's essentially, the presentation for today. Longer in the short run, we've underperformed largely due to fixed income. Our portfolio is more conservative than the benchmark by design at this point. And the only reason it's that way is because of just the uncertainty. We don't know when the tides will change, but being a bit more defensive today seems like the right thing to do given all of the uncertainty. Any more questions for me?
Next meeting?
No, yeah, I just think, thank you for all this, very informative, but overall, I mean, it looks like on that dimensional, it was a strikeout, but overall, the average is pretty good.
Yeah.
The portfolio's doing very, very well.
Okay.
I think the moves, in my opinion, the moves that Lucas has made and Webster seem to position, and what we've done as a committee, Leslie and I were talking about that, like we've done a lot in the last couple of years to, make sure that there are guidelines on this portfolio, and Webster was helpful in that, so it's in really good shape, and I completely agree with Webster sticking to our allocation, and because these are uncertain times.
Okay, next meeting.
February or January?
Well, it takes a while to get the end of the
Yeah,
year.
end of the year stuff.
You want early February, Bob, or late January for the year end?
Yeah, well, let me look at it. January, of course, is a Thursday. All right, so I got to count out the business days. Yeah, I think we could do late January. That would be like the 28th.
Okay.
We stick to Wednesday.
Everybody good on the 28th?
Yep.
Yep.
January 28th, 9 o'clock on the phone.
That works for me.
All right, I reserved it.
Thank you, guys.
Happy holidays.
Yeah, happy
Thank you.
holidays. Yeah.
Happy holidays. We'll,
Yeah, yeah, you
we'll,
too.
we'll talk next year, I guess.
Yeah, have a good rest of your year.
Yeah.
Thank
We
you
will.
all. Take care.
Thanks.
Thank
All
you.
right, bye now.
Bye.
Bye-bye.
Maybe the government will be open.
Yeah, maybe by then, huh?
Maybe not.
Maybe.
Yeah, I don't know. We might surpass our limit of, what is it, 35 days? Yeah. Getting close.
It's just amazing.
Okay.
What's
Moving
next?
on. Old business.
Brian,
Yes, oh, that's right, so there has been a lot of discussions on the Wakefield School and the Wakefield School Fund.
how
Not my
much is
year-
in there now?
Not much, that's in the sub.
14,
Yeah.
don't,
No, I
I'll
think
find
in
it.
full parking, I think it's like 50, 60,000.
Yeah,
That's what I
that
thought
sounds
too.
right,
Yeah,
yeah.
yeah.
Discussion among who?
Hmm?
A discussion among who?
I'm gonna say the committee.
In this committee?
Yes.
Oh,
Oh,
okay.
I'm
Not
sorry.
out there.
Yeah, I didn't, sorry, I guess.
Out in the real world.
Yes, so there's, I'm gonna paraphrase, it's not my area, but I guess maintenance facilities have been dealing with a lot of break-ins and busting of the windows in the
Oh,
building
interesting.
there.
Wow.
Yep.
So they're looking for money on what can they do with this. At the same time, there's been a lot of push to get upgrades to the playground. And where's that money coming from? So a lot of people have been looking at the money that's been sitting there for Wakefield. We've talked to the solicitor, and the solicitor felt that the funds were moved originally, not necessarily for that building, but for a school at that facility. It's no longer a school, so we can't use it. It was deemed you can't use it for the maintenance of the facility, as it's not a school anymore, or the
Mhm.
playground. But they are feeling that it could be used for school as a whole for the town. So those funds may go for something school-related eventually, as they're eyeing that.
But not specifically Wakefield.
Not Wakefield.
So they'll grab it for the high school probably.
Yes, probably. So just as something may be coming with those funds in the near future, as they are saying it could be used for school-related expenses, just not that
Interesting,
facility.
without, like, in the past, when we've talked about some of
Yeah.
these funds, they needed to chase down the
The
relatives
family.
or
Yeah.
something.
They're
Yeah,
not doing that.
so,
They need the money.
Yeah,
interesting.
I
Yeah.
know, that
Okay.
was
Yeah.
a change. That's where I was like,
Who
okay,
is
that's a
gonna
change.
complain? I guess.
Okay.
Yeah, right.
Yeah.
And,
We'll
and
say
wait,
sorry,
do
and
we,
when
does
the
the
time
town have
comes.
plans for Wakefield School at all?
No,
All
there's
over
a
the
lot of
place.
discussion.
All
Like
over.
affordable house, I mean, they don't
Basically,
Everything.
the forefronts have been affordable housing or park.
okay,
One of the, I mean, that seems.
Well, I mean, the town has the ability to sell the land and
Right,
the
to a
building and
developer.
to a
Yeah.
MIC
Right.
developer, which
Okay.
I mean, I've heard a garden going there. I've heard-
I can't see that. They're gonna want the money. It's all about the money, you know. Yeah. But
So that
would
there's
be
probably
nice,
there'll be
community
more to
garden.
come on
I'd
that,
like that.
but that's
Yeah.
there's been a lot. It's not a big pot of money in the grand scheme, but between the playground and the maintenance of the building, there's been
Yeah.
a lot of.
but that piece of land is worth a lot.
Oh, absolutely.
of money.
Yeah.
Yes.
What
Well,
are
I'm
they-
curious.
What are they talking about? Pulling the entire portfolio?
No,
just the funds
$60,000.
associated- About 60,000.
Yeah,
Oh,
Yeah.
50,
okay.
Just
60
what's
K.
associated with
And
that.
once they do that,
It's
will that-
defunct.
will they do that in other funds that
No,
are, or that are morbid?
What others do we have?
Well, no school is closed that
Right.
has a fund. South Road's not
Well, there's
affected.
no longer Kingston Academy.
Well, that doesn't affect us.
Right.
Pettisquamscot,
Yeah.
Right.
that fund, that would,
Yeah.
but there's no,
Yeah,
there's not much money there,
Yeah.
but it's still money.
yeah, yeah, sure. Sure.
I mean, is it setting a precedent for us? I guess is what I'm asking.
so,
It doesn't affect us because we're
Yeah.
not the ones that make that.
No, I
Right.
know,
It's
but.
It's a precedent for the town, but not us.
Yes, I guess that would be that.
But it
Okay.
should be for us because we're not managing the money for its full potential, which is to sit there and Right. Nothing,
Yeah.
for how many years?
Anyway.
So this is a good opportunity, I think, to
Yeah.
explore the other monies that are dormant.
What are the other monies that you're talking about?
I know we have a small amount in that depreciation fund, which I'm not sure what purpose that serves at this point, because again, that's a very small balance. The depreciation fund has 77,000 in it. Wakefield, 61, okay. And I thought there was one other one that wasn't being used at this time. I think there was another one. I didn't see the description of each because it's not popping for me. It was another one of the smallest potentially.
Pentecost, Pentecost, something like that.
Well, that's where it might be that, but it's not labeled as that on here. So which one is that? There is one.
Sewall.
Yeah, I think it was Sewall that
Okay.
we
Sewall,
discussed about
yeah.
in the past, so. There's
83.
a couple of them.
Yeah.
There's $3 million between the guild and the total
No, the
value.
guild money went out,
Yeah.
so
No,
that's
it says
gone.
between, the guild money you can't
Yeah.
touch, I mean, that's,
Yeah.
so if you subtract that number from the total number, it's about $3 million that somebody has
A
to
lot of
use.
that is scholarship that you
Yes.
can't
But how-
touch.
How much are they giving scholarships this year?
Not very much.
No,
I
not
think they
much.
should be given more.
$150 or something?
Well, it's a percentage, it's a
Yeah,
calculation.
yeah. Those unfortunately, the scholarship funds are the smallest funds. One is, I think that's the 21,000, and the
Default is 15.
so yeah, they're the two of the smaller ones.
Shannon.
Yeah.
Can I
Shannon
ask a
fund.
question? So, obviously, the town has spent a lot of money on lawyers for this subject, and we had spent a lot of money years ago when you showed me that stack of paper, and then it just got another letter this year, I believe, in February, right? Another looks at
Yes,
it.
yes,
And now we're looked at it again.
yes.
I also am one to think, is this setting precedents?
Yep.
And it worries me.
Mhm.
The school is closed,
Yes.
so, but if they're gonna do it, I don't know how they actually vote it on a motion, that it would only be for, so I'm concerned that they're gonna do it for other funds that may not be appropriate, including, the larger fund.
Oh, I don't. yeah,
But, so my
yes.
point is from this committee's standpoint, would it be allowable to ask to have a conversation with the lawyer?
Sure.
Because we have raised concerns about the stewardship of these funds and our role as trustees.
Yeah.
And we'd like to understand more why there's
This is
been
a change of venue,
of
yeah.
thinking
Yeah.
after years of thinking one way.
I can invite the solicitor, or he can. It was actually the assistant solicitor that provided this information, but
Mhm.
yeah, I can see if one of them can be available for the next meeting.
Is everybody in agreement with that?
That'd be great.
Yeah,
And in all actuality, this not ruling, this opinion actually slowed things down. I mean, if it went the other way, that this could be used, the funds could be used for the facility and not necessarily for education related.
Right, fix the windows, whatever.
It would have been gone already, because the money's going out the doors, fixing windows and things. So this actually slowed down these funds.
So
But that's
it's
only
actually,
Yeah.
yeah, so.
Well, fixing the windows is a Band-Aid, because until we
Yes.
do something
Yeah.
with the
Yeah.
building, you're gonna be
It's just,
fixing
that's
the
kind,
windows
to me,
again.
that's kind of a waste of money,
Yeah,
get
yeah.
some plywood from
Yeah.
the town and put
Yeah.
some windows.
Well, right, 'cause
Yeah.
they've got to address the space itself.
Yeah.
Otherwise, you're gonna just spend all your money fixing windows.
Yeah, I mean, one of these I don't have the description from, but one of them is associated with solely the high school, and there's been talk, will that get pulled for the high school project?
Well, I feel
That
like
could
it
go.
would,
That
yeah.
could go, but again, you're talking about a $150 million project, and this is $100,000 or something. What is it? It's not.
Well, it means nothing to them,
Hmm.
but it means a lot to
Yeah.
the
Yes.
people that set it
So
up.
does it go? Will it go? I think those. I've heard that mentioned. The out of the scope of the high school project is the potential field house at Curtis Corner. That is out of the scope of the project, and could those funds go towards something like that when we get there? I've heard that mentioned, but that is years down the line, and could that? I don't know.
So I guess, so there's a lot of talk.
Yes.
And there's a lot of
A lot
money,
of talk.
right? I mean,
Yes.
in the grand scheme, not a lot of money, but there's
Yes.
money. And I think it would be appropriate, like I asked if we could just be updated
yeah.
on the current thinking and the change of mind about the use of these funds.
Yep. I'm paraphrasing also, but I'll forward the email from
That would be great.
Peter. Yeah, just on his.
Sure.
But yeah, and then I'll ask him to attend the next meeting.
So, but we need to ask, I think, what funds we want them to look at and that we would like to spend. So, you've got, so what beginning cost, beginning market value? So we should be looking at ending market value, like the depreciation fund, if I'm reading this right, is 76,000?
You're on the.
Yeah, depreciate
Oh,
fund
okay.
and the Wakefield
I saw you
School.
with the
That's
quarterly
the only
performance,
two we
yeah.
know enough to speak about today.
Yeah.
We'd have to go back and read each definition of the other funds, but we know two are specifically for scholarship. And then Mike always said that you couldn't change anything because of the verbiage unless you went back to court, and that you could open the hornet's nest to have to return it to the family. So this is a very,
That's what
Yeah.
I'm.
very stark change.
And the other side of this, which I didn't get into yet, because we're at yard one of this.
Yeah.
We're a long way to go,
Okay.
but,
So we can wait till our next meeting is
oh
what
yeah,
I'm saying.
no, nothing's
Okay.
being, yeah. But the other side of this, we're capped, or the town is capped on how much they can draw, that 3.5% or whatever.
Right.
And so,
Yeah.
you know,
Right.
what we normally draw on an annual basis, could we draw all of these funds, or would it push us past that cap? We haven't even gotten there yet, so.
Right.
Yeah,
These
yeah.
are small amounts in the grand scheme, but if they wanted to pull Wakefield, would that push us over a threshold? Haven't
That's a
gotten-
really good question. Thank you for bringing that up.
Yeah.
So, because what he said is in our investment policy statement, there are rules, as we wrote, as to the amount, percentage of
That can come
that
out.
can
Yes.
come out.
Even for
Right.
scholarships.
Right.
Right. So we have to be careful that we're not, I think the language is we can violate it, but I'm gonna go back and read the
Yeah,
language.
yeah.
So,
Well, the
if
key
it
is
comes to that.
Who is we? Who's gonna pull what?
Well, thank you,
Yeah.
lawyer.
Yeah. Well, yeah, that's
I only-
not our job. But
I
we
never
certainly
wanted to be.
Involved can ask the question, but it's not our decision.
Right.
Right.
Correct.
Who does decide how much money to give in a scholarship? Because didn't you say, did somebody get $150 this
No,
year?
200.
I mean,
Yeah, I think it was like a,
200.
yeah, they were two
I
total,
don't
and they
even know I
totaled
would've
up to
bothered
probably
filling out an
$500.
application for
I mean,
that.
that's,
No,
It's
it was
one
1,000
book.
and
you
200.
can't even buy
Oh,
coffee
oh.
for a month for that kind of
Yeah.
No.
knowledge.
Yeah,
Oh,
but it's getting drawn off of, one of the funds that we do, the scholarships fund has 21,000 in it. You really,
Yeah.
like, to sustain that over, because it's supposed to be.
Because it's supposed to be
perpetual.
perpetual, yeah.
200
You really
will buy
can't-
you a good chemistry
Yeah.
textbook.
Or just go to Bill's house and get it for free.
Yeah.
All right, moving on. Anything else?
Let's see what's on here.
The only other thing I had to add, I guess, in discussion, just to bring it up, we don't need to do this now, but where we're going with this Civic Plus and the agendas and where we're going with that, and actually I usually get asked about this anyway, they like to have a calendar, so like for the year, where we just schedule every meeting, each meeting, the next meeting, they'd like us to, they want us moving towards, here's our calendar for the year, so here's our, and we can adjust that as we go, like.
Right.
But
it's
you
not
have to
carved
put
in
something
stone,
out.
but to put something down. We're not there yet, that'll probably be an agenda for next time to just
Yeah.
do a calendar for the year, but, so.
That's reasonable.
Yeah,
Yeah, we'll just go 4 weeks after the quarter or whatever.
Yeah,
So
exactly.
Pick a
And
date,
if you have to
that's
change
it.
you update
Yeah.
the website, and that's it.
Yeah.
Okay, that's fine.
okay. That's it.
Was that the only thing that the civic?
Yeah, I
thing
think
was?
so,
What was
in
all this
terms of-
stuff we had to do some training or?
Uh,
I haven't seen anything on it.
It's, I've had 3 of them in the last week and a half, these trainings on this, I'm like, we do this in Word, like, I mean, I think everybody's
Wait a
had a.
minute, do we have to do 3 too?
No.
No, we have to do 6. I'm like, all right.
It's a
my
volunteer
CE,
position.
I'm buried in CE training
I
and
bet.
securities training.
Well, that's what even that, as I'm doing the training, I did I had one yesterday, and the soonest I'd be doing this would be our now January 28th meeting. I'm not gonna remember.
Yeah.
Oh, yeah.
Yeah. Well,
All right.
keep us updated.
Yes, thank you.
We might be looking for some members. Keeps up.
That is definite.
Yeah, everyone's getting a little overloaded here.
At least with the Bar Association, there's a CLE requirement for lawyers.
Right.
I find it weird, but when you hit 70, you don't have to do them anymore.
That's weird.
Interesting.
And you would think, at that point, maybe we do need a
Yeah.
refresher.
Yeah.
Just
Can't
because you've
remember
been doing the same thing for 50
anything.
years doesn't mean it's right. But okay, I won't go if I don't have to.
Oh, funny. All right, so we have our next meeting.
Yeah. Move to
Already.
adjourn.
All right, so second?
Yep.
What,
All in favor? Adjourn.
Of adjourn, yeah.
I missed the word adjourn.
All right, so
All right.
at 10:02, I guess, 10:01.
Oh, 10:01.
10:01.
Let me turn the camera on
Oh, yeah.
so we can really talk.
Yeah.
Yeah.
Actually, I.